Data-driven insights for serious traders. As the closing bell approaches, momentum is analyzed, tomorrow's key price levels highlighted, and the setups that matter most broken down. This is Trading the Close with Verified Investing.
Hello, everybody. My name is Drew Dosick, and welcome to Trading the Close. Today, folks, we saw some nasty selling pressure in the first half of the day, all up until about 1:30. Then the markets just lifted right back up again. The semis were leading the way down. They were down over 3% today in the SMH, but has since now recovered, looking like not as bad of a situation that was about to unfold. The Trump administration did announce today that they were going to potentially, and they're threatening this, to restrict all computer software, critical software exports to China. As these trade tariff details pan out, they said that that's not only the option that they're weighing when dealing with China. But again, all of these are threats. Nothing is finalized as of yet, but the markets reacted to that tweet and really sent the price action lower. Lastly, we do have CPI data report that will be coming out Friday at 8:30 in the morning. The U.S. Bureau of Labor Statistics is being recalled back to do this report because it's critical for them calculating the benefits for Social Security recipients. All right, so let's get into the market summary board and take a look at what happened today. We got the Dow Jones down 0.77%, Nasdaq down 0.92%, S&P 500 now down only about 0.5%, really tracked back quite nicely today. U.S. oil spiked up today, up 3.21%. Gold is still under pressure, down 0.48%, and Bitcoin also under pressure, back under 110,000, down 0.31% on the day. All right, so let's take a look at the S&P 500 and heat map. Check out where all these big stocks landed towards the end of the day. We see here NVIDIA down 0.62%, Apple down 1.53%, GE now finally coming down. GE and GEV have literally floated up on the back of these AI data centers, finally showing a little selling pressure, down 2.88%. AMD also coming back in, down 3.47%. Intel down 3.31%. But then we have some positive news down here. Microsoft up 0.59%. Google up 0.43%. So it wasn't all bad around the stock market today, but it was for Netflix, down 9.92%, as we covered when I got off the show yesterday. Netflix was plunging down on the chart. So decent sell there on Netflix, as well as Texas Instruments. They reported earnings yesterday, and they also saw a pretty steep decline. So that brings us into the S&P 500. All right, guys, now let's look at the 10-minute chart to really get a good idea of what happened today. All right, so here was the opening candle that we had, and we really just kind of chopped sideways for the first 30 to 40 minutes of the day. Then boom, more selling pressure, then more selling pressure. And then here's when that announcement came out by the U.S. administration, saying that we could threaten and restrict all computer software, critical computer software, to export to China. And you can see price action plunge all the way down here to 664 before bouncing back up in the same 10-minute candle, but then retested that area. Looked like we were about to go lower, but then all of a sudden the markets just saved themselves, started lifting right back up to prior to that announcement. So it's very curious price action. And on the daily time frame, notice yesterday I was talking about this doji candle and what that represents, how that's indecision in the markets. And usually after an upward move with that doji candle, the price action is likely going to start falling after that. All right. And it works inversely on the downside. So if you're moving down rapidly and then create a doji candle, you're likely to get a bounce. Well, that's what happened today. We actually retreated from this top, from this doji candle, pushed down on the markets, filled this gap, and then bounced right back up. So far the markets are saved. All we had is just one day of selling. No big deal. That happens throughout the course of any sort of bull run. But the thing that stands out to me is right here, guys. This big red candle is we're still trading amongst this big red candle. Until we beat that, you got to anticipate further downside on the charts. This is very damaging to the pattern on the charts and is alerting a lot of big institutional investors that this is the area to sell. Sell it all, sell it right here. We can always buy it back should price decline. Next up, we've got the QQQ. Now, the Qs also were under some steep pressure today. You can see they were down here right around the $600 mark, but have since now bounced back all the way up to 605 and 49 cents. Incredible bounce on this, but similar situation as the spiders. This big red candle is still being traded within. So until that breaks either up or down, this big red candle's probabilities dictate that we should be coming down on the charts. We'll see if that gets broken to the upside. If it is, that's the failed move, and it will likely propel us up a little bit higher, as a lot of institutions and investors will likely start covering shorts that they placed over the last couple of days of trading. Next up, we've got the SMH. Now, guys, this one was hit the hardest. You can see it too, even showed on the 10-minute chart. We broke down underneath this 50% area of the parallel, stuttered for a few candles here, and then plunged down before recovering back up at the end of the day, putting in near-term bullish consolidation on the 10-minute chart. As you see here clearly, that's the 50% area of this parallel, testing on breaking down further. If you notice, we only closed one day down here after this big red candle. So this was matching up and lining up to be the second, but the markets again have saved themselves. The buy the dippers came out and lifted the markets back up, not worried about these tariff threats. We'll see how much develops overnight, if any, and then moving through the end of the week into the weekend, what happens with these trade wars. Again, our administration said there's a deadline of November 1st. We'll see if that gets negotiated and extended further, or if that selling pressure may actually continue if these threats are made to be real. Next up, the IWM. Now, the IWM actually tested a very critical level today, as it did on Friday, October 10th. That level is the inclining portion of this parallel channel. Right here on the bottom end, we tested it and then bounced right back up. Now, that still saved this chart because the upward trend is still intact. We need a price to break and then move down further for this trend to be completely broken. So for right now, pattern is saved. Tomorrow's support will be right here at $242.42. Resistance is still up here at this inclining trend line, right around $256 on the IWM chart. Next up, Bitcoin. Now, guys, this is what's also concerning for me for any sort of risk on assets, particularly tech, right? We had yesterday Bitcoin pushing up, making a great move, looking like it was about to recover all of this decline, potentially even tag the 50% area of the parallel. But Bitcoin and bulls got a big surprise as price retreated back down here, now currently trading around $108,000. You can see the bottom of this parallel is at $106,000, all right? So that will be a minor area of support, as well as this $105,000 level on the trend line will be a minor area of support. But the longer we hang out down here, folks, and put in this bearish consolidation, notice how all these candles, where they close. We had one close here, one close here, one here, now back down here. Now 8 o'clock tonight, Eastern time, United States, we'll find out where Bitcoin closes. But if it does close down in this range, that's all putting in bearish consolidation, implying a further move to go lower. Next area of support will be under $100,000, right at $97,650. Next up, gold. Gold, guys, check this out. Overnight, gold plunged down here through this inclining trend line, tagging it before where I had listed a level of support. And you can see here that we got down as low as $4,004 before bouncing up rapidly. Now, you know what? This is to be anticipated, folks. As I've said, there was so much demand for gold. There was people in Japan lining up around the blocks trying to buy gold. And if you're just sitting there wasting your time, wasting your day to buy this gold, that tells me too many people want it at once. And it's likely going to have some sort of rug pull action like what we saw yesterday. But today, the buy the dippers came right back in, right on that trend line, and pushed price right back up. Key psychological $4,000 level was one of the reasons, but also steep decline, roughly almost 10%. And then people were anxious to get right back into gold. Now, granted, this is a level of support, right? So I've highlighted that, distinguished it by this inclining trend line. We even noted that we paused right here, highlighting the fact that this was an area that should be respected should price come plunging straight down into it. We'll see if we start forming a bear flag over the coming days, as I think the selling pressure on gold is not over with. We could bounce right up into this resistance area of these wicks on the bottom of these daily candles, right around $4,200. We could bounce up there and this bear pattern would still be intact, folks. So be watching for maybe potential a small bounce, but ultimately consolidation in the lower half of this big red candle will then lead to further downward pressure on the chart of gold, then likely hitting the next major support on this inclining parallel channel, roughly $3,700 up to $3,770, depending upon the timing in which price gets into that inclining parallel. Next up, silver. Silver really didn't have too much to do today. A little bit weaker than in gold, but it didn't retreat down and start trading underneath, at least towards the end of the day. We did earlier and have since bounced right back up. Silver still is in a situation where we're likely going lower on the charts. Next support to watch, 46.79. Followed by 44.26. That area, 44.26, followed by this trend line, are going to be basically a sweet spot of support for silver. And that trend line, inclining trend line, is just under $41 at $40.89. But guys, I do want to point out something else on this as well. Notice this longer term chart pattern that's going on here. If you're a bull in silver, we've got basically a cup and handle pattern. Now, I don't like normally when price gets above the pivot point on the left-hand side of the cup. But if we start putting in consolidation under this horizontal trend line that you see here at $50.78, if we put in consolidation, break above, and then confirm, this is odd to say, folks, and there will be a lot of stopping points, a lot of profit taking, but this pattern can generate a move all the way up here to $89.38, all the way up there at the top end of the parallel. I know that sounds odd because silver's never been up there, but the parallel shows it can go up there, and this pattern also shows it can go up there. So that is on the table. So just keep that in mind. So any like retreats on silver could be good buying opportunities, particularly on this inclining trend line or the last level of support, as I discussed, at $44.26. Next up, U.S. oil. As I said yesterday, we're starting to put in some nice daily wicks, implying there was buyers down here that likely will start pushing price up on U.S. oil. And that's what happened today. Next target for this move on U.S. oil will be up here at this declining trend line, $61.58. Next up, nat gas also put in a great day today. However, it's going to be closing within yesterday's candle. Notice we reached up all the way today and tagged this resistance level, then got rejected. All right. So I'll remind you guys down here on the bottom of the screen, the daily RSI, we're a little bit overbought near term. If you want this move to have staying power, this move meaning going up, you want to see price consolidate within this range, within the support of 383 and 408. That would create bullish consolidation and allow nat gas to move up to the next level of resistance at $4.45. Next up, we've got some tech plays that I'm going over. Plus, I threw in Carvana as well. And guys, hang around to the end. We've got NVIDIA that I want to show you because NVIDIA is a key player in this market. We need to follow where price action is going on NVIDIA. All right, so Symbiotic put in a nice sell day today, down 7.8%. Getting through the support area. We'll see if this can act, if price can get up there tomorrow and start trading around the support area. If not, as we see post-market action, price action is already coming down at $61.69. Next level of support is going to be down here at $54.85. And this is a robotics play going hand in hand with a lot of the AI data centers and build outs for the new production and manufacture in the United States. So the Symbiotic play with robots will be eventually a very hot commodity. But notice when we have these huge pushes in some of these stocks that are more, they're not meme stocks, but they're just momentum driven stocks. There's like a big air pocket of a big bubble underneath it where sellers just sell straight into and then price comes right back down. That's why this trend line can help guide you into entering into these types of plays should you want to get exposure to Symbiotic. I'd be waiting down here under 55 bucks for a safer, more conservative entry. Now, just because there's a trend line here doesn't mean it can't be broken, but there's a lot of consolidation underneath that will provide support and likely should give a bounce, especially if price plunges straight down into it. Now, Carvana also had a steep decline today, but notice the recovery, big recovery. Now closing the day back in the low range of the candles over the past week or two of trading days. Interesting decline, 8.15%. Didn't quite tag this inclining parallel channel on the bottom end. Notice, though, this pattern, a move down, sideways consolidation. Also notice the big red candle. Guys, this isn't just one magic trick I'm talking about over here on the SPY with this big red candle. These big red candles mean an awful lot on charts. They usually dictate price action moving forward and also going down, just as displayed right here on this chart of Carvana. Notice these two daily candles on Thursday, October 16th and Wednesday, October 15th. Price tried to get above this big red candle, but got rejected both times. And then we even made an attempt there yesterday to get back into the top portion of the 50% of the parallel, but then got rejected there too. And price then went underneath this consolidation. All the while, still bearish consolidation, didn't trigger a further move lower, but that is on the radar, at least for the very, very near term. Also, another piece of technical analysis, there was a massive daily topping tail over here, July 31st. That gave perfect insight as to the rest of the price action that we're seeing. Notice we haven't gotten above it. And usually when these occur at the top of the charts, guys, pay attention. This is important stuff. It will help guide you for future trades that you're in. Say if you're a bull and you're in this, well, then you can use this candle as an opportunity to exit whenever price gets back within it, just as it did here in September 18th. Next up, QuantumScape. Now, this company, as the name states, is involved with some quantum technology. But you can see here too, big air bubble created underneath all of this buying momentum. And then really within 2 trading days, this one big red candle on October 16th, followed by another big red candle today, have really just sent the price straight down on the charts and now declining from the top almost 30%. Right now where we're closing is about 28.5%. So decent decline here, but this level of support, 1323, caught price. So far right now, price is saved. If there's a further move down tomorrow and we close underneath today's red candle, we will be coming down to 1186. Followed by this inclining trend line that would be the Goldilocks zone, potentially to start entering the trade right around $10.68. If you're more aggressive, you could start scooping it up right here at 1186 and then add to it on this inclining trend line. Next up, we've got some Bitcoin mining stocks. I've got CIFR as well as CLSK. And one of our viewers, and thank you so much for commenting, wanted to get some analysis on this chart. All right, so you can see I've only got 2 lines drawn. And those are pretty important lines. And significance is that this is a head and shoulders pattern that's on the chart. Now, this is on the hourly time frame. The daily, as we saw a moment ago, wasn't as clearly defined with the shoulders. However, with the hourly time frame, this still can play out with a targeted move down here to $12.21. You know what's going to happen if price gets down here? Bitcoin likely is going to be sub $100,000. This could be a great buying opportunities. I think Bitcoin should still get a decent bounce if it does get down there to the $100,000 mark or even sub $100,000 mark. But I flip back to the daily pattern. You can see here, there wasn't too much to tell as far as a head and shoulders pattern, but it's clearly there on the hourly. Now, please note, daily patterns are stronger than hourly patterns. Doesn't mean hourly patterns can't play out. It's just they don't play out as often as the daily patterns do. So if the way that this head and shoulders gets negated is if price gets back above this inclining trend line, which is the neckline of the head and shoulders pattern, and closes up above it. If so, then that measured move is taken off, and then CFR can, I guess, continue on its merry way. But you look at this weekly chart, that's basically straight up, folks, now starting to put in a nice red candle to pull price action back down into reality, closer towards this $12 mark. Next up, CLSK, also a Bitcoin mining company and an AI data center play, as they do manage some data centers. And that's what they're trying to roll out in this company. Now, CLSK, very great move. You can see this from September, pushed up all the way up over 160%. Now that's unwinding. Look at these big declines, down 30% at the peak for the price action from the high to the low today. Post-market, price is still coming down. I don't think the selling pressure is done with CLSK. I think we're likely coming into this inclining trend line that you see here on the chart. The price action there is $14.34. So in essence, anything under 15 bucks could be a great entry point for a beginning position, getting the toes wet in CLSK. Great move though today. I want to see, especially for great rebounds, you want to see another plunge day tomorrow right into this level. That should then generate a decent near-term swing trade. Lastly, we got NVIDIA, folks. Now, NVIDIA, look at where price action is today, all right? We have, again, big red candle, sideways consolidation. That's a bear flag, folks. Let me flip over to the weekly time frame. What is this? That's a weekly topping tail on the charts. Just as I conveyed in previous charts, when you have a topping tail at the top of the chart, that's telling you guys something. That's giving you insight that it's going to be very hard for price action to get back above, close above, and move higher. Notice this is the second topping tail on the weekly time frame. We beat this one. Price declined initially, then came back up, and on this week, we negated that topping tail. But then the following week, we put in another topping tail. I've seen this happen many times on charts where you get multiple topping tails right towards the climax of price movement before we have a steeper decline. But anyway, the current topping tail is still intact, and we have bearish consolidation on the chart. Should this bear flag play out, we need price to close down underneath this red candle. The low of that candle is 177.29. If we get price to close under that, that then opens the floodgates for this bear flag measured move to take place and reach the $167.45 support area. That would complete this pattern, and it's sure enough looking like it's going to happen. But so far today has been saved with this huge buying pressure at the end of the day. Look at that V-shaped recovery. Not sure if they're calling the bluff on these tariff wars or what, or if they're just saying, hey, you know what? Bad news is good news. I'm buying the market, and good news is good news. So they're going to buy the market also. We'll see how this all plays out. A lot of bear signals appearing on charts, at least for the near term, guys. Thanks for watching. Thanks for tuning in. Don't forget to like and subscribe. Share this off with your friends and family so they too can start learning how to chart technical analysis on their favorite stocks. All right, guys, take care. We'll see you tomorrow. Bye-bye.